What's up, YouTube? It's your boy Gabe with Dork. You probably know me from trade1348.com. Now, I am responding to Chris Sain's video. Now, he did a great video on how he used the 13 and the 48 EMA.
Drop it.
As a YouTuber, I personally understand how hard it is to get as much information in a video and still get your point across, right? And not jump around so much, you know, like kind of like this, whatever. But Chris, I tell you what, man, I really liked your video. And if you want to fly down to Central Florida, I will send for you, all expenses paid. And I'll dig in deeper into the strategy. But your video inspired me to cover some of the bullet points that were not covered in your video. Again, I understand as a YouTuber, it could be quite difficult to just cram all that information in. So we're going to get right to the chart here. And here we are looking at TradingView. Ladies and gentlemen, I'm also going to give you this chart for free. If you have TradingView and you have New York Stock Exchange, NASDAQ, and ARCA real-time data, you can in fact use this chart. Now, there's a couple of tweaks to this chart. Obviously, you can see support and resistance, and this is going to help you along with the strategy, especially if you're playing along on the 3 and 5 minute. As you can see, this strategy does pay very well, where you get a call to a level and a put to a level. Again, these support and resistance lines are created for you automatically. The rules are simple. We have the 200 EMA here in red. We have the 48 EMA in yellow. And we have the 13 EMA in green. When the 13 crosses below the 48, you get a put signal or time to go short. Now, this rule applies as I teach my community that when price action is below the 200 EMA, depending on what time frame you're on, that you are in fact biased to shorts or puts. As you can see, there was more momentum and strength in this play. Now, we do use other indicators, and a lot of you are used to using the MACD with default settings. You have fast length 12, slow length 26, and signal smoothing 9. What we're going to do is double this. So 12 becomes 24, 26 becomes 52, and signal smoothing, that becomes 18. What we have is a smoother MACD that follows along, right? And guys, you will find that these settings work really, really well on larger time frames as well. Here we go. What we use the MACD for is to confirm the move and identify weakness in the trend. Here's an example. As price action is moving up, we can see the cross of the MACD over its signal line. We're then clued into weakness. We see that here as we got light green on the histogram. I hope you're following along. We try to make this uber simple. Again, we're giving you the chart for free. If you are on Thinkorswim, just add the 13 and the 48 EMAs, add the MACD, and change your fast, slow, and smoothing lines, right? So let's get right back to it. And hi, Mom. How you doing? I'm on camera. I made it. Moving along, we see here, we lose momentum. We get into a put signal. The 13 crosses below the 48, so therefore we have a very strong move with the SPY. Let's go ahead and measure this out from the point of cross. That is a $1.96 move. For those who are playing options, you know that this could be a very, very profitable trade. Now, what keeps us in this trade is also the MACD crossing below, right? So we gain that momentum. You see we lose momentum in light green and finally enter bearish territory with the cross of the MACD to the downside. We ultimately would like to see the MACD in a bearish leg. In a bearish leg here, you would like to see the MACD below neutral, which is 0.00, okay? Now, the opposite is true when you are playing calls or you are going long. And let's go ahead and take a look at this, right? This is a great example of the SPY here. Again, we got a signal. The 13 crossed above the 48 here, therefore you have a call. Now, I'm not exactly too bullish just yet until we in fact break the 200. Now, I am in fact biased to this call. And as you can see, the SPY just went on a tear. We break to 200. That is a $3.27 move all the way to market close. Again, when you are below the 200 EMA, you're biased to puts. Above the 200 EMA, you are biased to calls. And as you can see, the MACD guided you. Now, this here looks like consolidation, but you can see that weakness there until it crossed here, the MACD, and then it crosses back up. Something else I want to add to this, and what we also see is RSI. Now, when RSI breaks above its moving average, and when RSI is in fact above 50, we declare the move in a bullish trend. So now we have three indicators. We have the 1348 declaring a bullish trend. We have the MACD declaring a bullish trend. And then RSI above its moving average and also above 50 declares it a bullish trend. A lot of you guys use RSI and say, well, if it's 30, it's oversold, and when it's 70, it's overbought, but it doesn't have to be used in just that manner. You can do it to measure volatility. You could also use it to measure momentum. That's what the RSI is for, relative strength index. Okay, going back to the chart here, we can bring up quite a few examples. And guys, we can look at this on a daily. We can literally pick apart the strength of puts because price action is below the 200 EMA versus the strength of the call. You see, we could also go ahead and see the strength of these calls. The good old days when the market trended. You got your call here way back when, November 20th. And she never came back down to the 200 EMA until April 21st. Well, if you want to count this zone here, this is going to be in January. But a full, clean, almost permanent break came here in April. Okay, so this would make us biased to puts. As you can see, as of now, we have consolidation of the EMAs, which is helping us to sort of kind of speculate or guesstimate that, well, the market might be shifting to the upside. And this can be shown here with the tightening and the winding of the EMAs. Now, what we see with the RSI, well, we see moving average seems to be flattening out, and we ideally would like to see RSI break above 50. You would have to put this strategy to practice on various time frames. Find a time frame that works for you. Not every strategy is foolproof or 100%. However, if you have enough indicators to help you build context into the move at that moment in time, you will find yourself to be a far more profitable trader. Now, I can't let you guys go without showing you the all-new traffic lights, which is built upon the 1348 trading strategy. And let's get to the chart here. You can see traffic lights. There you go, right? Traffic lights guide you through the 1348 EMA crossover strategy, adding an additional layer of context to the trade. Green traffic lights, bullish. Red traffic lights, bearish. We also have something called thigh gap, and this is a very interesting new indicator that's currently in beta, and this is helping traders to be able to identify the strength in the move and or consolidation to help you avoid chop and data decay. Anyways, that's it. Yeah, Chris, great video. I hope this helps, adds more context into what you were sharing. I really love the strategy. I live and die by it. We built a very large community around it, and we constantly add layers to create the context of the trade. Anyways, this is Gabe with Dork. I'm signing out. Peace.